Okay, good afternoon, everyone. Today is Wednesday. It is Wednesday, December the 7th, 2022. The time is now about 12:06 p.m. And I'm doing this video at the request of someone who wanted to know about doing swing trades, or somebody who's for somebody who is works daily or has a busy schedule and they don't have time to look at the markets every day, or in order to day trade, which is something I don't do anyway. I don't day trade. So most of the trading or investing I do is for a longer term time frame, or because I don't have time to sit back and watch charts and everything daily in order to try to get in and out of trade. So one of the and before I go through this, I want to let everybody know that no plan is perfect. So nothing is going to be perfect. So make sure you get that in your mind. This is the markets. The markets can change at the drop of a hat at any point, and your whole game plan can be thrown off. So just keep that in mind. Use this as a guide only, and just know that markets can change, and your whole sentiment or system can fail at the drop of a dime, because markets can react that way. All right. So with that said, use this as a guide, and generally use something as a guide, and you stick to that guide. You'll have a better chance of having some having more success than not. All right. I want to start out by taking a look at the VIX. One thing I like to do is I am always interested in what the overall market is doing. Okay. I pay attention to the overall market. I like to stick with the overall trend of the market in general. I don't like honing into one particular specific stock and believing that it's going to do what I think it's going to do. I like to go with the overall trend in the market, because if you look at most of the time when the overall market is pulling back, or the overall market is rising, generally most stocks are doing the same. Okay, I say most because not all, but generally most stocks are running in the direction of the market, unless there's specific news or specific sectors that there's something going on with that may cause that sector or stock to do something different. Now, so I like to start off by taking a look at the VIX, and I always, me personally, if you're looking for swing trading or longer term trading, you have to pay attention to the longer term charts. That's a must. Okay, you got to map those out and try to search for pivot points and trends. That's what I'm looking for, pivot points and trends. And one of the a great way to start out is by taking a look and studying the VIX, because the VIX can show you which direction overall market is possibly setting up to go, or which direction overall market is currently in, and how long can it be in that particular pattern. So here is a weekly chart of the VIX over the past several years. And one thing you'll notice, especially now that we're in this bear market, you'll notice these wild swings. And those are some of the best times in order to to be a swing trader, or pretty much be a swing trader, because these trends, they can last for a couple of weeks, couple of days, or couple months, and then the trend changes. All right, so I'm going to point out a couple trends that's easy to spot by looking at the past year over the VIX. And let me use this annotation right here. So one of the things you can spot out in the VIX, just by looking at this generally, you can see a trend. You can see these trends and they just stick out. If you can get at the beginning of one of these trends, then you can be quite successful. So all those lines I just drew was trends in the VIX. And if the VIX is trending downward, that means normally the overall market or the S&P is trending upward. And vice versa. If the VIX is starting to trend upward, that means overall market is more likely is trending downward. So looking at the longer term charts, spotting the trends can give you a base to start with. Now, another thing you want to try to highlight is pivot points, where it seems that price action or the trend is attempting to change. So pivot points where it seems like it was a drastic move in one direction or the other. And I'll try to circle a couple. Pivot point here where the market was coming down, then all of a sudden it just shot back up. This is a slight pivot point there, pivot point here, pivot point here, pivot point here, pivot point here, and you get the picture. Now, another thing you want to point out along the way is the overall trend. Now, let me do this. So looking at the overall trend, I'm gonna back this up just a tad. So, you look back around 2020, let's get 2020, where we had a big old gap and a big old gap up in the VIX, right there. And the VIX continued to travel until it got up to about 85. Then it pretty much peaked out and you saw the VIX start to move downward. Well, in this downward move, a new overall trend channel or trading channel started to form on the VIX. And the VIX was in a longer term downward trend. So after we got this little spike up in the VIX, we started to see a trend change, a longer term trend change, should I say. And that's something that you would have been able to map, that you can map out. I'm looking at previous action to try to make a determination as to how price action may react later on. Get rid of this. So price action started to go, VIX started to pull down, and then then you can see that the overall VIX, the trend was in a downward motion. So overall, you see the trend was trending downward. So as the VIX was continuing to go down, it was creating, every time it get a bounce, it would come back down, create a lower low, a lower low. Lows are getting lower and lower and lower as the VIX continued to sell off with during that time frame. And every time it got a little bounce, it will pull back to that trend line. So what I just drew down here was an overall trend line. So every time the VIX got to that point, it would settle there and then eventually bounce a little. So this was a trend line, and then it was a downward trend line, meaning that the overall VIX was in a downward motion longer term. So that means the overall market was in an upward trend longer term. And you can notate the pivot points on top, which is where price action would normally travel up to, VIX would normally travel up to before it got a meaningful reversal. And if you wanted to, you can actually draw a trend line on these as well. Okay. Now, so you see that channel? It's a downward trending channel. Then all of a sudden, you get around October of 2021, something changes. That downward channel. So this downward channel here that the VIX was in, this downward channel. You notice the downward channel shifted. It shifted from a downward channel to an upward channel. So spotting those trend changes is a good way to to have a general idea of which way the market is going to be heading to set up your trades. So I like to go with the overall trend in general. So again, that was a channel there. That was a downward channel. Then all of a sudden, the market starts to change, and look what happens. We start to see a strong pivot point here. It's already down here. And then as the VIX started to rally, and every time it sold off, it would create a higher low. And these lows are just about even here, but there's still a trend line that we can draw from this point all the way up to this point. And in general, that was the new direction. That's the overall new direction of the VIX. It's in an upward channel. So that's why, that we started to see this bear market, towards the end of 2021 or whatever. Because the overall trend channel or the overall direction of the VIX changed, even with all these spike ups and spike downs. The overall direction of the trend of the VIX changed. Every time the VIX would pull back, then the VIX would get this gap up and it would pull back to this level. It would bounce again, bounce again, bounce again. And what's happening right now? VIX is bouncing again, starting to bounce again. So right now we are, we had a bear market rally, which is this area here when the overall S&P and everything was rallying during this bear market rally, and now we got this huge bounce over this trend line with a big green candle that's starting to form this week. If this stays green by the end of the week, the more than likely we'll see a reversal back to the upside. All right, so I gave you a couple things to look at to look for an actionable pivot point. If you pay attention to the full stochastics, you'll also get, some signal that will also help you confirm what you're seeing in the overall price action, such as in the full stochastics. When we had the overall trend starting to change, you see the full stochastics start to pivot here. You got a red line in the in this green line, you start to see a pivot. So that's confirmation that what you're seeing up here in the price action is a pretty good sustainable move to pay attention to. So we almost got a positive divergence with the green line crossing back above the red. And that was signal, and that was after we reached oversold conditions. So that's another thing I like to pay attention to. Look at oversold conditions in the full stochastics, as well as the wins percentage. Look for these oversold conditions. When you more than likely get to these oversold conditions, sometimes you're going to see a bounce. Another indicator I like to use is the CCI, which normally sometimes it gives you a better reading than other two. And I like to look for these hinges on the downside. After you get to oversold levels, you just hinge, start to hinge up. And you got this yellow line that's starting to cross, that's about to cross. You get that hinge up, that shows you that a change is happening, some type of pivot just occurred. So now that we see that we are hitting these pivot points and we are starting to reverse, that's a good sign that price action is ready to go in the opposite direction. Another thing you want to pay close attention to, especially in this bear market, even a bull market, if it was that for that instance. But pay attention to these long stretches of red or even long stretches of green, because when you see long stretches of green or red, normally eventually they're going to be followed by a strong reversal, and I mean a strong reversal. So looking at the VIX, this is why I say these bear markets sometimes can be very, very extremely lucrative, especially in these long bouts of wild swings, because those wild swings are great trading opportunities. And what I want to point out here is these long stretches of red. Look over here when price action was trading up at the beginning of 2022. Even though these red candles are going up, right here you see a pivot point in the red candle. We start to go down with a stretch of red in a row. Over here, we see a stretch of red in a row, and after we had a big spike up, then all of a sudden there was a big sell-off in the VIX. That means the overall market was trending higher in a big way. And look at the stretch of red here. From June down to August, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red candles in a row. That's normally known as a stale red light. When you spot that, I like to look for some confirmation below and look for some type of crossover or pivot point below in my full stochastics or Williams percentage or CCI. And this is a perfect one right here because you see confirmation all the way down the line. Strong stretch of red, almost at the trend line. And then you look down below. Look at the full stochastics, right where we get this noticeable, almost a noticeable pivot where price action just set there and we started to rise. Look at the full stochastics in oversold conditions, and then we start to get a momentum crossover and the market start to move back up. Williams percentage, look at that, oversold conditions. It was oversold here, but the price action continued to go down until we got here. Then you start to see a pivot. And CCI, same thing, oversold. You start to see a pivot. And what do you notice? All of those signals kind of line right up with each other. That is what you would really want to see, is a perfect reading like that, because that is normally your best opportunity for a market reversal. All right. So again, if you see this set up in a VIX, that means the VIX is setting up for a a major reversal, which it did. And that means that the overall markets would be is also setting up for a major reversal, which it did. So now with that said, look what's happening now. Perfect timing in order to show you this analogy. Look how many stretches of red we had in a row here from October all the way down to December. So we'll start counting here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Then what happens now? We get this big green candle. 10 red weeks in a row. That means the market was totally oversold. I mean, the VIX was totally oversold, and it is due for a reversal. And that means the market was rallying. That means the market is due for a reversal from the upside to the downside. And what's happening this week? You're starting to see that move. And just like over here, you see a major pivot happening, and you got multiple signals that's showing you the same thing, what normally happens. So we hit the trend line here, and you see a pivot. Price action went from red all of a sudden with the green. And that was after a long stretch of red. Keep that in mind, long stretch of red. Long stretch of red, start looking for a green. Looking for a green, looking for some of these signals to start to line up with each other. So we got this signal here. Then look down below. Full stochastics, it is in oversold territory, and it's starting to cross up. Got the pivot, it's starting to pivot up. Williams percentage was in oversold territory, but now it's starting to cross up. CCI was in oversold territory. Now it is starting to turn up. All of that lines up in a row. That is a good space to believe in a reversal to the upside on the VIX. So now we got that out of the way. Now you see that's a major reversal. I like to find these major reversals. We had one here too, believe it or not, but I like these two were the best. We had one here as well, but not as major as this one, as these two that we see now. So clear that out the way. So now let's flip over to our S&P 500, SPX. So look at those time frames, and we're going to see if we see here's our S&P 500. Same thing, spot your pivot points. Spot your pivot points. I like to spot the pivot points out first on a longer term chart. So you can see what price action could possibly see this type of reversal. So if I go back to August, go back to 2000 and go back to 2020. There was a pivot point here where price action was going up, and then we got an immediate reversal. We got a pivot point here. That was around 2018. Got a pivot point here. We got a pivot point here. We got a pivot point here. Pivot point here. And it's like we're starting to form one here. On the bottom, there's a pivot point there. It's a pivot point there. It's like pivot points here. Pivot points here. The one thing I like to do with this is after you notate those pivot points, what you can do is the bigger picture is that you notice if you look at this from a distance, you'll see the overall when we hit this pivot point here, the trend started to change. You started to see these lower highs. Every time the market would bounce, see a lower high created. This high right here is lower than this one. This one is lower than this one. This one is lower than this one. This one is lower than that one. This one is lower than that one. Then you can draw yourself a nice little trend line. That lets you know that overall we're still in the bear market. We're still in a downtrend. Every time we hit that mark, we pull back, we pull back, we pull back. All right. Now, and if you wanted to, you can actually draw yourself another trend line to see the actual channel that we're in this downward trending channel. So every time we get to the top of the channel, we pull back, and every time we get to the bottom of the channel, it's like we have been seeing a possible rally. And again, if we stretch this out, let me get rid of this. Let me get rid of all these notations. Stretch this out just a bit. Now, again, you can see the strong areas where we really started to reverse, and you can see the pivot points. Right here lines up with this oversold territory here in the stochastics. Then we get a bounce, deeply oversold. We got a bounce, oversold. We got a bounce. Now what's happening? We're starting to see this stochastics. Look at that, starting to hinge over. So is the Williams percentage. So is the CCI. It's on the opposite of the VIX, isn't it? Yep. So we had a major pivot point there and a change. Price action went up, and then we have one here. Looks like price action is about to come back down. We had a pivot here and around in this area here. You can see price action started to go up. Price action started to go up. Price action started to go up. And this was a major pivot point right here where we started the bear market. And this right here is a little bit different because you see a major drop off in a Williams percentage, like right away. That gives you signals that the overall trend is changing. But one very key metric is that if you look closely at this Williams percent, the full stochastics, you can see something happening here, right around about here, is that we started creating these lower highs in the full stochastics. So when you start to see, we're starting to peter out up here, and we're starting to get these lower highs. Every time the full stochastic would bounce, it was lower than the previous high. That lets you know that the overall trend was starting to change. And it gave you an advance warning. Overall trend was starting to change. So now that we got all out the way, so you see where the pivot points are. You see how to determine or how to see overall trend that we're in. And like I said, it's not rocket science. It's almost easy to spot these trend and these pivot points, which is where you can actually be pretty good at swing trading if you can spot these pivot points and these trend changes. And keep in mind that as well as watching near-term pivot points, look at previous points, like right here. This is a major pivot point. This is when we had the pull back in 2020. So that's going to be a major trend line. So whether we're on the bottom of this trend line or on top of this trend line, when we get to that area, we're going to have, some type of battle to break that line. Okay, so keep that in mind that if we get to this level, we're going to have some type of battle to break that line. See how we got close to it here and we got that bounce. Now we come back down toward the test it again. In this next test, we could break that line. So ultimately, as price action is starting to pull back, I think that is the first level of resistance that we can see, or the first target that the overall markets could be heading back to is right there at that particular trend line. Once we get there, we got to see what happens. Do we bounce again, or do we finally break it? We have to see when we get there. But we know right now by looking at these pivot points and overall trend, we see that the market is starting to reverse right here, right now. All right. Hopefully that gave you some a little bit of clarity as far as setting up your swing trades. Look for these pivot points and these trends and these trend lines. Look for these pivot points. The trend changes, such as here. Noticeable trend change. So we're in an overall downward trend. So while we're in this downward trend, look for these pivot points for a possible entry on the upside or the downside. Look for these pivot points. And if you can line them up with your full stochastics, that is the strongest signal. I mean, if you can line them up with your other indicators, that's the strongest signal of a here and now reversal. Back to the top of the trend line. So those are the strongest signals. So hopefully that was gave you a little bit of insight of what you can look for now. When if you're trying to pick out a specific stock again, like I said, when you're in a strong downward trend or a strong upward trend for that matter, most stocks follow the same pattern, with the exception of stocks such as gold and silver. You got to look at the overall gold and silver ETFs, or the gold and silver sector, to see how those trends are setting up, because they may be a little bit different, maybe acting a little bit different from the overall markets. But I'm gonna give you a prime example. Let's take one stock. Look at Apple in general. Look at Apple in general. Believe it or not, it is similar, very similar to the overall markets. Let me get rid of these trend lines so I can show you. Very similar, if not a little bit more weaker. You see how the overall trend in Apple changed, just like the overall markets back at the beginning of 2022. Overall trend changed. Didn't quite make it back during this time frame when the market started to go up. Apple didn't quite make it back up to that line. So it hit this pivot point here in reverse, came up a little bit and starting to go right back down with the market as the market goes down. So the market is starting to pivot now. So more than likely, Apple's going to start to pivot right along with the market. All right. And you can look at several stocks and you'll probably see the same kind of setup. Meta is the same way. It's been in a stronger downtrend. But the same thing, if the markets are starting to reverse now, even though Meta has been already reversing in a strong way, the market's starting to reverse now, the more likely this is going to start to have a reversal as well. All right, so you get the picture. Hopefully this was something that helped clarify or help give you some pointers or something to use. Again, like I said before, no system is perfect, okay? But this is a good general guide to use in order to look for possible good swing trade setups or long-term trading setups, either to the upside or to the downside. All right, folks. Hopefully this is something that you can use. Until next time, I'll be signing off.